All right, let's talk refinance. How's that sound?
Yeah, that sounds great.
All right. So, what are some of the key things that people need to know about refinancing? What are some? Let's go refinancing 101. What are some? We talked credit, obviously. We talked 80% of the value. But what are some things that fundamentally people need to know about?
So I think, one thing that they need to think about is, the penalty coming out of their existing term. So are you doing a refinance when it comes up for renewal, or are you going to do a refinance kind of midterm? So I think if it's midterm, you need to think about what the penalty is. And does your savings kind of offset that cost? So I think that's one thing to think about.
Yeah.
And sometimes it depends. Like, we deal with a variety of different lenders, and sometimes we'll do a refinance with the existing lender. And sometimes they can get a bit of a break. It kind of depends. Sometimes existing lenders are less apt to sometimes want to do a refinance file, because they're like, why should I take on more debt for this borrower, right?
Exactly. We already have their business.
We already have their business. Why should we advance more credit?
Yeah.
I sometimes feel like a new lender is a little bit more motivated to help in a refinance situation than maybe the existing lender. I mean, we deal with a variety of different lenders every single day. So, and some lenders have sometimes promotions on refinances where maybe they'll cover some of the fees in terms of doing the transaction. So that's interesting. With a refinance, like sometimes we'll, change the amortization. So sometimes we'll reduce the amortization to help, borrowers pay off their debt quicker. Sometimes we'll extend the amortization. It really depends on, really the financial situation of the borrower at that time. And, with the mortgage lending, it is a snapshot in time. So we look at the income, we look at the assets, and we look at the credit, and then we can make a real good recommendation on what the best way to move forward is.
Why would somebody refinance midterm, I guess?
I think refinance midterm, there's probably a need. Maybe there's a need to clean up some of that unsecured debt. Maybe there's a need to renovate the home for whatever reason. Yeah. Maybe there's a need to lower the interest rate. Mm-hmm. Maybe there's a need to lengthen the amortization. There's a lot of reasons why people will do a refinance, and there's not just one.
Right. What are some key things that people need to have in place? It's because people need to realize when you're refinancing, you need to have all of the same things that you needed when you get the mortgage initially, right?
Yeah, it's the exact same underwriting.
Same thing.
Yeah, it definitely is. The one thing that you don't go through when you do a refinance is refinances are not CMHC or high ratio insurable. So when you do a refinance, you're really doing a conventional mortgage, and that is really reliant on the property. Maybe sometimes more so. Oftentimes in a refinance, you do need a full appraisal, and that's something that we would order. Based on the joys of technology and all the data that we have available to us, there are some low ratio valuation systems that lenders do access, which can be really slick. Like sometimes we can get an approval and that valuation all together in one, and that will save the borrower some time, but also some money in terms of doing that, appraisal. When you're doing a refinance, it's a maximum of 80% of the market value of the home. So that's the market value, and that really means what you think your home is going to sell for. And that's one thing I always ask borrowers when they want to do a refinance. What do you think your home is going to sell for? And they're like, is this COVID pricing or is this like regular pricing? I'm like, I think COVID pricing is the regular pricing now.
Yeah.
And I think that's something that we kind of need to just get to, come to reality and come to grips with. So it's 80% of what the market value is. And then, maybe we advance all of those funds. Some lenders will offer a collateral charge type product where maybe we can break it down into a couple of different mortgages, and maybe we can break it down for a home equity line of credit and stuff like that. And we can, really talk to the borrower about what is the need for the refinance, and we can give some advice. People sometimes say, hey, I want to do this refinance of my principal residence to buy another property.
Right.
Sometimes people will leverage that equity to buy a rental property, or maybe they want to buy maybe a second home. So that's a big one. And sometimes we'll do both of those transactions concurrently. Mm-hmm. Sometimes we'll do the refinance on the principal residence first, because you really sometimes need to get every dollar you can out of it. And if you're making an offer on a property, you kind of really need to know how much equity you're going to have to work with for the new one. So sometimes we'll do that transaction first, but sometimes we'll do them concurrently. And, we'll get the approval of the refinance and the approval of the mortgage on the purchase file done. It's still two separate mortgages. It's still on two separate properties. They're not interconnected. But the proceeds from one transaction, from that refi transaction, would cover the down payment and the closing costs for the new one. We actually do that quite often.
Right. Who pays for the appraisal?
It depends. Oftentimes the borrower will pay.
Mm-hmm.
In some scenarios, lenders will have like promotion where they will reimburse the borrower for the cost on closing. But usually if there is a full appraisal required, in most cases, the borrower pays upfront.
Right.
Because, lenders need to know that the borrower has a little bit of skin in the game.
Yeah.
This is a big financial transaction.
That's right.
And sometimes an appraisal can make or break a transaction too. Because, the property condition, the property value, there's a lot of nuances that, really come in that appraisal that the lenders do kind of rely on as their security.
Right. So how much typically would an appraisal cost? What type of cost are we
I
talking
think it depends on, what type of property you're refinancing. If it's a single family home, appraisals can be anywhere from, $300, $400, $500. I think, when you're looking at a rental property, sometimes it can be more. Mm-hmm. If the property's in a more rural area, and, in Nova Scotia, we have a lot of rural areas.
Yeah.
Sometimes there's additional costs for travel for the appraisers.
Right.
As you can imagine, there's probably the most amount of appraisers in Halifax. But if you're looking to do a transaction in a more rural area, there might not be as many appraisers in that area that lenders do use.
Is there some risk in refinancing in that perhaps your credit isn't what it was, or might you potentially, and people may look at that and say, maybe it's not a good time to refinance. Maybe just let the mortgage renew.
I think in some cases, people don't do a transfer out of their existing lender and they don't do a refinance because maybe the income has taken a hit or maybe the credit's taken a hit. But I think it's worth it to kind of get a second opinion. And a no from one lender doesn't mean that it's a dead deal. And, we often see clients that come in from other financial institutions that, they weren't able to get approved for whatever reason. And, every lender has a different kind of matrix of what they will accept. Mm-hmm. And I think that's why mortgage brokers are really, the best solution.
Yeah.
Because we have access to so many different lenders that if it doesn't work with one lender, maybe we can do it with a different lender, or maybe we can position it a different way, or maybe we can do it with an alternative lender, or maybe we can look at a second mortgage for a temporary, period of time.
Right.
But we can look at the whole picture.
But one thing you have to have, though, you have to have the equity in your
yeah,
property.
if you don't have the equity, you can't refinance.
Forget it, right?
Like sometimes I'll get a call, a year later from someone who bought a home and they put down 5% and then they got the high ratio insurance from the Canadian Mortgage and Housing Corporation, Genworth or Canada Guarantee, and then they want to do a refinance. I'm like, well, what's the property value? Like, well, I bought it for $500,000. I think it's worth about $525 now. I'm like, okay. I think for you to get like a refinance and like get any equity out of the property needs to be worth like much more.
Yeah.
You know what I'm saying?
Yeah, absolutely.
And the other thing I think, if you're going to do a refinance midterm, typically the penalties are lowest coming out of a variable rate. So I think that's one thing that, we'll certainly talk about, in the future shows. Yeah. We're going to talk a lot about variable rates, why they make sense. And for me, I always say, friends don't let friends take a fixed rate.
How do people get a hold of you?
You can visit us online. It's a great place to start at teamclinton.ca/radio. Lots of great information. We have hundreds of blog posts about a variety of different topics and about Mary Detmus. So certainly check us out online. It's a great place to start.
Do you have any closing comments for our listeners in Halifax and Ottawa?
Well, again, Happy New Year. I know we're halfway through the month of January, but it's February is right around the corner. We're positive. We're happy that people are tuning in. We're happy that this is our fourth year doing Mortgage 101, and we want to welcome our listeners in Ottawa and welcome back those listeners here in Halifax and the new listeners.
All right, great stuff. It's Mortgage 101. Clinton Wilkins and myself, Todd Veinotte, will be on the air all year long. Thanks for listening, folks.